There is a looming economic crisis that threatens to cause significant damage, and Elon Musk has raised concerns about this impending disaster. It is natural to feel nervous about the situation, but rest assured, we are here to provide you with the guidance on how to navigate through this challenging period. So, let's delve into the details and explore how you can overcome this incoming problem. Elon Musk draws parallels between the current situation and the subprime mortgage crisis of 2008. It appears that we might be heading towards a recession in 2023, although the extent of its severity is open to debate. It is prudent to prepare for the worst while hoping for the best. To understand what escalated during that time, let's take a look at the events surrounding the subprime mortgage crisis. Starting in 2001, due to a series of consecutive reductions in prime rates, millions of customers were able to obtain low-interest mortgage loans. The accessibility and favorable terms of these loans led to a surge in demand for new homes, consequently driving up home prices. However, the situation took a dramatic turn in 2005 when interest rates suddenly spiked. This sudden increase in rates made it increasingly difficult for even well-qualified borrowers to afford the soaring housing costs. As a result, the inflated home prices became a burden for many borrowers who viewed the situation as excessive and unreasonable, further indebting them. The impact was substantial, with a significant decline in housing orders and an increasing number of subprime borrowers finding themselves trapped in a deep financial hole. These borrowers, who had relied on adjustable rate mortgages, ARMs, faced even greater difficulties as their initial loan payments became challenging to meet. Furthermore, a significant challenge arose when homeowners struggled to sell their properties for a profit due to the collapsing demand in the housing market. Consequently, the chances of safeguarding themselves from the crisis and minimizing losses were slim. This situation further deteriorated as banks made a bold move by terminating loans for subprime customers. As a result, housing prices plummeted, exacerbating the decline in demand. However, this action also put the banks at risk, as the loans they had issued formed a significant portion of their assets. The complexity arose when the banks faced difficulties in tracking these loans, leading to a standstill in credit facilities. This had a severe impact on both businesses and creditworthy individuals, limiting their access to loans. Many companies, to mitigate losses, resorted to slashing expenses and reducing their investments as much of their client base was unemployed. This unfortunate course of action resulted in numerous layoffs, further impeding the purchase power of consumers. As a consequence, the demand for products decreased significantly since many potential consumers were unemployed or financially strained. Even Tesla, in response to the economic downturn, announced a reduction in its salaried workforce by approximately 10% over the next few months. However, they mentioned that the hourly workforce would see growth, which necessitated a reduction in salaried positions. In terms of overall headcount, the 10% reduction in the salaried workforce equated to roughly a 3 to 3.5% reduction. The automotive industry took a severe blow during this period, with companies like Chrysler and General Motors facing bankruptcy. Desperate for assistance, they had to agree to partial government ownership through bailout programs. The overall consumer confidence had significantly deteriorated, leading to reduced buying power as people became more cautious with their spending, anticipating potential emergencies. All this and various other factors paved the way for a severe economic downturn in December 2007. The impact was significant, with the poverty rate rising from 12.5% to 15% by 2010. To address this economic crisis, the American Recovery and Reinvestment Act was passed into law, although a legislative process led by the Federal Reserve, Fed. The act aimed to inject funds into the budget to preserve and create jobs, expand unemployment insurance, and implement safety net programs like food stamps. However, despite these efforts, the law did not effectively alleviate the situation. Poverty levels among young adults and children surged to 22%, and the United States experienced a substantial loss of wealth due to a 57% decline in stock prices, amounting to an estimated value of $16 trillion. This staggering figure highlights the stark reality of the situation. It is often said that during times of economic turmoil, the rich tend to get richer while the poor become even poorer. This notion was evident as wealthy individuals show signs of financial gains despite the economic pandemic, while the average and poor segments of society incurred losses. This disparity underscores the fact that those who suffer the most during a recession are the poor and average individuals. Therefore, those in this category must prioritize saving money more frequently. It is essential to have a financial safety net in place to navigate emergencies without falling into financial distress. Embracing a frugal lifestyle from today onwards can significantly contribute to building up that safety net. What's even more astonishing is that the economic downturn didn't confine its impact to the United States alone. Other countries, such as Latvia, experienced a substantial decline of 25% in their gross domestic product, GDP. Additionally, foreign investors who had invested in the United States also faced the consequences of the recession. This global interconnectedness emphasized the interconnected nature of economics and how one nation's economic downturn can have far-reaching effects on others. Elon Musk's insights provide a clear perspective on the anticipated inflation and the challenging times that lie ahead. Individuals must take proactive measures to protect themselves from the potential impact of these circumstances and enhance their financial resilience. Let's explore some practical steps you can take to increase your financial capacity. One effective way is to consider leveraging your skills and expertise by freelancing in your field of interest. Platforms like Freelancer, Fiverr, or TaskRabbit offer a wide range of freelance opportunities that can supplement your income and boost your financial capacity. Developing financial discipline is equally important. A recommended practice is to allocate at least 15% of your paycheck towards a savings account. This consistent saving habit will gradually build a financial cushion and provide a safety net in case of a recession or unexpected expense. Look for opportunities to generate passive income, where you earn money with minimal effort or ongoing involvement. This can include investing in rental properties, dividend stocks, peer-to-peer lending platforms, or creating digital products like ebooks or online courses. Establishing a foundation by saving a minimum of $1,000 for an emergency fund is a prudent strategy. This fund serves as a buffer to protect you from unforeseen circumstances and acts as a crucial financial fallback. It is important to remember that this fund should consist of non-retirement savings or liquid assets like stocks, valuable possessions, or any other accessible resources. Elon Musk emphasizes the need to be prepared for the possibility of a recession, stating that the odds are more than 60% of this coming to fruition. Acknowledging this likelihood, it becomes imperative to brace yourself for potential challenges and plan for the worst-case scenario. Musk's remark about hope is meant sarcastically, as he stresses that hope alone is not a viable strategy to navigate through economic turmoil. Instead, he points towards the Federal Reserve, Fed, as a potential savior for the economy. The Fed has the power to implement measures that could mitigate the impact of a recession. However, relying solely on hope or external factors is not sufficient. It is essential to take personal financial responsibility and actively pursue strategies to safeguard your financial well-being. Additionally, caution must be exercised when it comes to margin debt, as Elon Musk advises. History has shown that margin debt can lead to mass panic in the stock market, as seen during the Great Recession in 2008. The accumulation of margin debts often serves as an indicator of an impending economic downturn. Elon Musk suggests that while a recession may be inevitable, it won't last forever. Recessionary periods have occurred cyclically throughout history, and just as they have come and gone, this incoming recession will also pass. The economy may endure significant challenges during this time, with everything seemingly falling apart, as the Federal Reserve intentionally facilitates an economic reset. Elon Musk indicates that a recession is likely in the near term, and based on his experience, companies may experience negative cash flows for 12 to 18 months before recovering. From Elon's timeline, it is advisable to consider venturing into investing or starting a business towards the end of 2024 or mid-2025. Although it may seem like a long wait, the potential benefits make it worthwhile. Focus on pausing other plans and instead saving up all available funds that are reasonably feasible. Elon Musk's opinion on the recession is controversial, as he publicly expressed a certain tongue-in-cheek mannerism in seeing it happen and criticized certain groups for their past actions. He believes the recession will serve as a rude awakening, reminding people that success doesn't come easily, and that the stay-at-home period during the COVID-19 pandemic promoted laziness. To prepare for the potential recession, Elon Musk implemented numerous layoffs at Tesla, acknowledging that it was a difficult decision to let go of some of his best employees. This move demonstrates his commitment to safeguarding the company from the potential economic downturn. If you find yourself in a similar situation, it can undoubtedly be stressful. However, taking proactive measures and considering alternative strategies will better position you to navigate the challenges ahead. If you have any thoughts, questions, or additional insights on the topic, please share them in the comments section below. If you enjoy topics on making money and investing, do consider subscribing to our channel for more trending and informative videos in the days to come. Thank you for watching.